So comment as you guys come in. Make sure to like the video. We have a special guest on the channel today. I'm super excited. And we're going to be talking about investing in the Northwest. This is part 2 in our Invest in the Northwest series. So before we get into that, if you are new here, welcome to Living in the Pacific Northwest with Hal Byrd. I'm Hal Byrd. I am a licensed realtor and relocation specialist in the Northwest and help people who are considering moving. And today we have Garcia-Bustamante from Guild Mortgage.
Hello, hello.
And she is absolutely amazing to work with. We've done quite a few deals together since one of my clients introduced me to her last year. Do you know how to mute it? Sorry. No worries. Of course, we've got the man behind the camera.
Howdy.
And so he's going to be manning the comments, I guess. So if you guys have questions, make sure to leave them, which is one of the great reasons that we have Rebecca here, because you can ask a lender. So we've been starting this series about investing in the Northwest and wanting to convey to you guys the opportunity for what Washington and Oregon has to offer in terms of being a real estate investor and some of the ways that you can get started with that. So we brought Rebecca on today so that you guys can ask any lending questions, especially ones that are related to investment properties. And so that's what we're going to be talking about today. Rebecca is honestly like just the most salt of the earth person. I'm reading the comment you put up there, dear. It's a new setup today. She's such a salt of the earth person, like just has a heart of gold, has an amazing drive and passion to help people and really bust all of the negative stereotypes about lending and do things in an honest way, in a way that makes everyone feel good. And she's amazing and fantastic at that. She's licensed in 10 different states. And so I'm going to let you, did I miss anything? I'm going to let you intro yourself a little bit.
No, I think you got it. Went on the side sales side about almost 2 years ago. Came from underwriting, so I worked over in the underwriting department with Guild Mortgage and management for 6.5 years.
And so what does that do for our clients who use you in terms of what does you having that underwriting experience bring to the clients? Like, what do they get out of it?
Basically, I'm pre-underwriting the file instead of usually you get like pre-qualified because they don't do all their homework.
Which is what Rocket Mortgage does.
Yeah, exactly. And so what I do is, I'm pulling credit, I'm reviewing the bank statements, I'm reviewing everything under the sun, combing everything with a fine-tooth comb so that there's no, surprises down the way. And that helps us win a lot of offers too, because, with listing agents, sometimes, they get nervous about accepting offers, especially from a lot of the online lenders where, they go back, maybe we're like they're a week into contract, and I get a lot of those where they're like, please help, because they weren't able to push the file through because they didn't do their homework, so.
Yeah, I think it makes a big difference. Like one of the examples that I can give when we were working together is there were 2 offers on the table. This is earlier this year in February, and the offer that was higher than my client's was $20,000 more than my client, and they were using Rocket Mortgage, and the seller and the listing agent specifically went with our offer because of Rebecca, because she was local, because she wasn't an online lender, because she pre-underwrote the file, which basically means from a seller's perspective, that means that they have a more secure buyer, a more valid, strong buyer they have more confidence that it's going to get to closing. And from a buyer standpoint, it also means that you don't go under contract loving a house and then come to find out a couple weeks in you can't get financing and you have to back out because the lender that you chose can't honor the pre-qualification that they said, whereas the next step above, like pre-qual, is like the bare minimum. Most agents won't even submit an offer with a pre-qualification letter. Then you have pre-approval, and then you have pre-underwritten. And that's what Rebecca does, the highest level. So I know why that's good for our clients, and listing agents know why that's good, but a lot of times the general public doesn't know or doesn't understand. And so I think that's a really big deal.
And I would add, even with that, like let's say you don't know that you're ready yet. And, if you do, you do an application and, we're at a stopping point where there's maybe 3 things that need to be worked on, then at that point in time, I could give them like a roadmap on what they need to do to get to where they need to go. And, so I'm kind of able, okay, we can fix this within possibly 3 to 6 months, or, at least we're working on it now. Instead, I've had people hold off and not wanting to submit an application and holding off until they're ready. And then when they're ready, I have to, pull the plug and say, we need to wait now because we need to fix this, that, or the other.
That they could have been doing while they were waiting.
Exactly.
So make sure you guys drop some questions below while we have Rebecca on the channel so you guys can take advantage of her and all of her knowledge. So we're going to get started by talking about the investment side of this opportunity that Jarrett and I see in the Pacific Northwest, in terms of the fact that Washington and Oregon are such draws for so many people. They're some of the most popular states to move to these days. For the past decade, basically, they have been. And that presents opportunity in the sense that not only do people need houses to buy, but people also need houses to rent. And if you are someone who is opportunity minded, you want to look at where are people going and what services can I provide to them. And if you want to get into real estate investing, you want to either diversify your assets from the stock market, which we all know where that's at right now. You're looking for something that can cash flow or build equity over time, especially if you're in let's say like a pre-retirement age and you're looking to start building equity, like our current client who went under contract this week. He's in his early 30s. He's ready to build wealth for himself. And one of the ways he's going to do that is through real estate, which is actually the number one way to build wealth is through real estate. So maybe let's talk about some of the strategies that are available to people. So let's use our current client as an example.
Okay. Someone
who makes a pretty good income. And I'm trying to frame this in a way that's, I guess, useful to people. So if whether it's a couple or an individual, they're looking to start investing, maybe they own their home right now, what is the first step that you think someone should do when they're looking to start investing?
Well, obviously, fill out an application, and that kind of gives me, an idea of what we can do. And it's a different scenario for everybody because, some people have a lot of assets, some people don't. And then I can, fit them within the different programs to see, what option there is. But I think that a lot of people have the idea that they need a lot of money down for investments. There's different ways to go about it so that you don't have to go that route.
So what are can you give me an example of what some of those programs might be?
As far as the programs are like conventional, we have jumbo products, but where I was going with that as far as the strategy of doing an investment or investing in real estate and being able to take advantage of the owner-occupied rate. So,
meaning like getting a multi-unit, possibly?
Yeah, you can get a multi-unit as long as you're the primary in one of the units. You can still get the same rate for as if you were living there. So primary.
And then, so if you're the primary and you're going to buy like a multi-unit as one of your first investments, what's the least that you could put down in that case?
So there's 3 to 5%. And I would always suggest, just from my perspective, is only putting the minimum amount down. That way, my strategy has always been put the minimum down because then you can save, for your next, your next property.
And I totally agree with that. When my clients do ask me, which normally they're going to consult with their lenders, but I've had clients ask me, what do you think about how much we should put down? And I tell people, put down the least amount to get the payment that you want or the payment that you can afford or need. because you can be using, instead of having all of your assets, your cash assets tied up into one house.
All your
you
eggs
could
in one basket.
Yeah, you can spread it out.
Yeah. Why wouldn't you? Yeah.
So if someone's already has a home, and so they're already using owner, like the benefits of having that place be owner
Primary.
occupied, yeah. What would you say would be the next step? Do they, if they wanted to get an investment property from there, do they need to save 20% down?
Yeah, they would if they're buying for investment purposes. Then yes, they would have to put 20% down. But what I was talking with our mutual client the other day was, there's a way around it where you can go as a primary. You can have another primary if you're moving out of the house that you lived in and moving into the other house, but it has to be at least a year. So those are the rules. So with him being single, he doesn't really mind moving around. He's still younger, and so he'll still be able to get the rate as the primary.
So in that case, you would buy one home. I see that we have a few viewers. We definitely need to get those likes up, guys. So make sure to like the video as you're watching and ask a question. We would love to hear from you guys. That's what we're here for. So we'll keep chatting away, but if you guys have questions, Jared's manning the comments and he'll let us know. Even if you're watching this one, it's not live. So even if you're watching the replay. So in that case, so he's going to buy this property and you're saying that after a year, he can maybe take the funds that he has, put the minimum down. Thank you guys. Put the minimum down and then keep the remainder of his cash and keep saving over the next year and then move out of that property a year later to go buy a new investment property and then he can rent that.
Well, an owner occupied property because he'd be living there too. And then if because I know he said he was going to rent the rooms or possibly do like an Airbnb eventually, but he can't use, he wouldn't be able to buy as an investment unless it was an owner occupied in order to put that minimum amount down and still get the owner occupied rate.
Right. So what happens to his loan? Like he buys an owner occupied, or he buys a house with, I don't even know how to phrase that, using owner occupied rates. And then if he's going to move from the first house into the second house, what happens to the first loan?
Well, as long as it's conventional, it just stays. It stays as it is. So it's where you get into like FHA where it has to be a certain amount of miles apart and everything else. But in most cases, it's conventional. So you have to live in it for at least a year. And then after the year, you're free to, you can relocate and buy a new home.
So if you're looking to gain wealth and assets and really increase your portfolio, you could buy one house, owner occupy it for a year, save up for your next down payment, again, putting 3 to 5% down each time, move to another house, and you could do that for maybe 5 years, and at the end of 5 years, you'd have 5 homes rented.
Yeah, and then and then they're paying your mortgage, and you're making the equity.
And then in 30 years, you owe almost nothing, and who knows what the values are going to be.
Exactly.
Or the rents in that case, where you can use that for cash flow for retirement.
Exactly.
I mean, think about that. If you have 5 homes, and the average rent in Vancouver, just for round numbers sake, is $2,000, that's $10,000 of cash flow. And if you were holding on to them for 30 years, then you'd be paying him off. Like, we'll use our client. He's 30 right now. If has those homes for 30 years, the loans get paid off right around the time he's retiring. And then and this is today's rent. We all know that the rents are going to go up over time.
They're saying 7% every year is where
it's appreciation.
In rent is where the rents are right now. So
that's huge.
Yeah, it's huge.
Can you read that comment to us?
Absolutely. SF asks, are there programs to aid in purchasing homes on agricultural land? I've looked a little bit in the Richfield, and another channel mentioned a lot of new homes there are on agricultural land.
So I think she or he, I don't know who it is, they might be asking about maybe like USDA loans, because Richfield qualifies for USDA. Well, is it all of Ridgefield or parts of Ridgefield? We might have to
I think
double
it's
check.
all, because Ridgefield is pretty rural still,
Yeah.
considered.
So USDA loans, you can put 0% down. You can definitely do that in Ridgefield. And you can use an agricultural loan, a USDA loan on new construction. So you can absolutely do that. And do you want to say anything about Ridgefield in your experience?
Yeah, I live in Ridgefield currently, and it's really up and coming. I love it. I love everything about Ridgefield, and I mean, the schools, everything. My son hasn't, he's now in Ridgefield schools, and he just loves it. He can't say enough about it.
As a matter of fact, somebody has a video coming out about how Ridgefield might be the new campus.
I do. That's coming to come out soon in the next couple days.
Great question.
And I mean, you live on an
Apple orchard.
yeah. So you can go new construction, like very track home, straight streets. Like one of my clients calls them boxy houses, like cookie cutter homes. You can do something like that if you want. Like a 3 or 4 bedroom in a more traditional suburban community, and then you could live on an apple orchard.
Yeah.
By the way, I want to come and press some cider there.
Oh yeah, definitely.
What time is our client coming over tomorrow?
Tomorrow, I haven't got the time from him, but yeah, we can. Yeah, you should come. You guys could video it.
We could do that. I have a
Actually,
walkthrough.
really good footage for that video too.
Okay, done. We'll meet
Yeah.
there. But I
Okay.
have a walkthrough at 11.
Okay.
Was there a second part to that question?
Second part just said, I tried looking up videos on the process and haven't come across this specific scenario.
Okay.
So I guess going back to Ridgefield being agriculturals,
Can you repeat the first question? I want to make sure we answered it in full.
are there programs, excuse me, to aid in purchasing homes on agricultural land? I've looked a little bit into Ridgefield, and another channel mentioned that a lot of new homes are on agricultural land.
I would say like programs as far as maybe down payment assistance, or I would say USDA is probably your best bet with that, but there's also some other programs as far as, like first-time home buyers, also like the Washington bond, that might be an option. So it just depends. But I can definitely, if you want to give me a call, we can go over any other questions you may have.
And what's the best way to get in touch with you while we're early on in the video?
Yeah.
Or early-ish?
My cell phone, and where you can reach me anytime, but when I'm live on camera, is 971-533-1082. Or you can Google me, Rebecca Garcia-Bustamante, and my website comes up. Or email at rebeccag@guildmortgage.net.
So, and we'll put all that in the description after the video. So if you guys want to reach out to her to ask your questions, I would highly, highly recommend it. One of the best things about Rebecca is that she's not high pressure, in the sense that you can have a conversation with her and, she's going to tell you like what is going to be the best scenario for you, and really treat you like a friend or like family from the get-go. We see a lot of lenders, especially in this market, that try to just advertise based on what their rate is, and the rate is not permanent. Nobody's offering 3% rates today, so you can't, that's not something that you can get. But so when we're talking about, like little differences in the rate, the big thing that I would be concerned is, and I tell my clients this all the time, is, well, what are they charging you to get that? Because there's a lot of times where you'll end up paying more. Yes, you get a lower rate, but you pay more fees. And I think that that's something that, oh my gosh, hello. It's the Copes in Woodland, yes.
Hi from the Copes. That's to work with.
Hey Darren, how are you guys liking, I shouldn't put too much information, but how are you guys liking where you're at? Because I see you on our website from time to time looking at homes. It's another part. So I hope you guys are still happy on your fantastic property. But we should definitely get together. Oh, they have such a cool property. We're gonna talk soon. I'm gonna call you guys. So they said you were both the best to work with. That's so sweet. That's so good. And I love when I see someone's, like, on Facebook, most people use their real names, but on YouTube, everyone has like usernames. So I don't know, like, I can't match people sometimes. So I'm always tickled to match people with their username.
Right.
Thank you for the testimonial of working together.
Yeah.
Okay, what else? we were going to talk about so we talked a little bit about different strategies. Like you could move every year if you wanted to quickly acquire new properties, and you make the sacrifice. I know everyone hates moving maybe for 5 years, but at the end of 5 years, you own 5 properties. You'll still be living in one of them.
Yeah.
And that's not necessarily, I mean, if you want to invest, it's just you're going to pay more in rates, obviously, because investment properties cost more. As far as the rates go, and then on top of that, you have to put 20% down. So
Now, could we use this house we're in? We're in your open house in Kathleen. Can we use this as a case study? Because this is a kind of unique situation. Like this is something I would be interested in as an investor because you have a rental unit already rented, so you have some cash flow. Plus, obviously, you have the ability to live in it. So
yes. Hello, as you guys are coming in, make sure to like the video and drop your comments and questions. Any lending question you've ever had, we're here to answer. Well, she's here to answer. I'm here to chat with you guys. So we'd love to hear from you guys. To give this as a case study, the house that we're in right now, which is my listing at 390 Columbia Street in Kathleen. This house is a little bit less than 1,700 square feet, the main house. And then in the lower part of the home, there is a 2-bed, 1-bath apartment that is currently rented out. The annual rent is $9,600. And I know that we had someone come through the open house that was asking how that would work. So if you're looking to buy, this is sort of like a duplex, kind of like an ADU. What would you say in that consideration? Because you can count let's say you're buying a duplex or a triple or a quad, which you can do all with FHA. So if you, but you can count it as income. You can count the currently rented properties as income. So how does that work?
Right. So basically, there has to be a certain amount of time that they're in the rental, but and I would say roughly right now it's about a year. I mean, guidelines are always changing. But with that, you can use, that cash flow in order. So let's say there's maybe a first-time home buyer and they have, maybe some lower income and they can't qualify for the full loan amount, where you can use that as cash flow income to add into your total income. So usually, it gets technical, but basically 25% is what they shave off the top in order to use that income, for repairs or whatnot. But yeah, that's definitely something that you can.
Would that also apply to, let's say that you were going to buy a property that was previously an Airbnb, and then they were renting it on Airbnb, and they can show like we made $60,000 from this Airbnb in the last year. You could use, what's 25% of?
I believe so. I know that we weren't able to use Airbnb income previously, but there has been some guidelines that came out that we possibly might be able to use that. So it would just be a case-by-case study, and if somebody has a property that they have in mind and they want to give me the address, and I can kind of do some digging. Okay, and that's another thing. I love situations where it's out of the box, and if I can figure it out, I will. Yeah.
And that goes back to like your underwriting background. And there are these guidelines, which is basically, and correct me if I'm wrong, like rules from the federal government that says you as lenders can do this and you can't do that. And it's probably like tax law, super extensive. And she'll actually go and dig into the guidelines and figure out how we can make something work within the guidelines so that Guild and yourself can be able to lend on it, where some lenders might just turn you away.
Yeah. Well, yeah, and I've had even some lenders call me and ask me, hey, we've heard that you were able to close on this property. How'd you do it? And I have some other clients that want to buy something similar. Can you help me, or can you take it over? And yeah, I'm all about it. And sometimes it's even going down to calling the county, asking for, helping them with permits and everything. I mean, going above and beyond. I love doing stuff like that. So
there was one time you almost were going to get on a plane to bring back documents.
Yeah. Well, because I promised you we would close on time, and I meant it. So, yeah.
That's another story. If you guys want to hear that, I guess we can share it. But I've mentioned it on the channel before. Just your like ultimate commitment to our clients is appreciated, and I'm glad that you didn't have to fly. Although
I've never been to Louisiana, so I wouldn't have mind.
I told her, like, if you do, can you bring me back some beignets? Okay, so we talked about some different strategies, whether that's buying multifamily. We talked a little bit about agricultural. Thanks for the question, SF. And then we talked about a way that you can acquire new property every year and still get owner-occupied rates and lower down payments. So you're actually putting less of your own capital into it. So we talked strategies, we talked some of the loan types. Do you think we should talk maybe about the difference between an investment property and personal property? Do you think we covered that pretty well?
I think we covered it. I would just go back because I know you said between 3% and 5%. 3% is for the first house potentially, and then after that, if you were buying another home, it would be 5%.
We need it a second.
Yeah.
And then how many loans can you get? Like, what's the maximum that you could do?
It just depends. I mean, it depends on your debt to income ratio. It depends on a number of factors. So I just have to look at it and kind of determine where we're at. A lot of the time with having multiple properties, you need some reserves on the side, and what that is some money in the bank as far as maybe sometimes we have an automatic approval that when we put into the system, and sometimes it says you need 3 months, you need 6 months of payments on the side. So let's say I'm just throwing out numbers, but you have a payment of $1,000, you'd have to potentially have $6,000 in reserves set aside. So,
and I mean, you'd probably want to do that anyway if you're a smart investor.
Yeah,
Jarrett would know about that for sure. And then maybe let's share some success stories that you've had. I know that we were at one of our other mutual clients' housewarming parties this week. Shout out to Kevin and his
Hi, Kevin.
Fantastic hosting skills.
Oh my gosh, the food was amazing. I'm going to call him on the way back and ask him some recipes because that was some amazing food.
Our client, he's recently retired and wanted to host everyone who made him feel welcome since moving here because he didn't know anyone when he moved here. And like the two of us were some of the first, well, the three of us were some of the first people that he knew, and he's met his neighbors and some of the bartenders at one of the best restaurants in town. We actually ate there last night at Amaro's table. Oh, so good.
Yeah.
Is that your phone? Do you need to get that?
No.
Look
sorry.
at that. Kevin does retired. Two of my favorite people. Thank you. I was asking him, I don't know if I told you this. We didn't get to talk much because there were so many people there and like everyone was conversing. It was fantastic. I posted on Instagram, like, I didn't get any photos because we were enjoying ourselves much. But he was making those puff pastries. Did you have any of those?
Yeah, those were good.
They were so good. And I asked him, where did you get these? And he goes, from the store. And I'm like, I've never seen these before. And I'm thinking that they were like frozen, pre-made, that he just stuck them in the oven. He's like, no. I bought the puff pastry dough and then I filled them with brie and this jam and put the egg wash on top. And I was like, this is fancy. And
everything. Yeah, that needs to be a monthly. Yeah.
Oh, yeah. Oh, it was such a good time.
I just need to turn off the ringers. Okay.
Bring you back.
Okay. Sorry, guys.
Need it on the lending front. People are already calling you.
Yeah. No, I think it's the little one.
Okay.
Yeah.
That's such a cute bag, by the way.
Columbia.
Yeah.
Oh. Okay, so we were talking about some success stories. So we had a client who, and I don't know too much about their financial situation, but she had come into some money through inheritance.
No, hold on, let me turn off my ringer, otherwise we're gonna have back-to-back calls. Okay.
Don't threaten me with a good time, because I will. Well, we will too. I know I need to get back to your text. We might go to lunch on Wednesday with Kevin.
That would be another really good video.
Yeah.
Just having him on and talking.
Yes, Kevin, can I do a client interview with you when we go out to lunch?
Yeah, I could come too, and we could go to your favorite restaurant.
Yeah, we'll do like is that a threesome or a foursome video? It'll be pre-recorded, so we'll cut out all the all the extra stuff.
Yeah.
We were talking about so our clients. Okay, he says yes.
Oh, okay. So you wanted an example. Okay, so I had a lady come in to get a loan, and she had she was buying. I think it was maybe her 10th or 11th property, and she had all of the other ones paid off. And I was like, wow, there's a story here. And I'm like, what did she do in her lifetime? Or did she strike it rich or whatnot? And so she said, no, she's like, no, I bought them all and bought them, years and years back. And I've just held on to them, used them as rentals. And she said that she, basically, because I asked her, well, what'd you do? What did you do when you, for a living? I thought she had like a really, lucrative business or And she's like, she had told me, and these are exact words, because I think she migrated from, I don't know where, but she said her words, fresh off the boat, and she didn't have two pennies to rub together. Coming into the States, she didn't speak the language, and she was a housekeeper. And she said that she would save the minimum amount down that she had to put, and that's how she invested. She was a housekeeper, basically. She told me she was a housekeeper, and she saved every penny she could and put it into real estate. And as soon as she had enough money to get another one, she'd buy another one, and the rest is history. And she said something to me that I'll never forget. And she said, Rebecca, it's not the amount of money that you make, it's what you do with the amount of money you make. And that really stuck with me. And she's like, if you remember that, she's like, it'll take you far in life. So, yeah.
That's really cool.
Yeah.
And then is there anything else we should talk about? Last questions as we wrap up?
Yeah, call for questions.
That's a great story though.
That's a great story. It's, the book I just finished reading, Richest Man in Babylon, that was like basically the #1 theme throughout the entire book.
Oh my gosh, I have that book. I haven't read it yet.
It's short.
Rebecca's such an avid reader.
Yeah, I am.
Yeah.
Okay, I'll read it.
Okay, I don't think we're gonna have any questions. So I guess we'll wrap up with what?
Just maybe wrap up, because the majority of your channel are people considering a move here, either to or within. So maybe I don't know if there are any other just final thoughts or considerations of people who may not even live here yet, but like the idea of getting I'll call it getting a piece of the Pacific Northwest. So maybe just leave them with any thoughts or
so I would say that
or start putting into place, because again, I guess what we look at is owning property here over the next 20, 25, 50 years, to me is going to be arguably more valuable than owning land elsewhere, just because of the resources, the traffic coming here,
climate migration,
the values. So.
Yeah, I would also say that Rebecca can definitely take care of you on the investment side with loans, and she can talk about the strategy that's going to make sense for your personal situation. And then if you want to see if the numbers make sense, because the way that the market's changed this year in 2022 is very much buzzwords. And I would also say don't take what the national headlines are saying at face value, because they don't always apply to the local market. Real estate is a very a microclimate, in the sense that yes, the national trends and economy and the national housing market is one thing. Some real estate colleagues of mine say that there is no such thing as a national housing market, because every single market is so different, and when one market can be booming, another can be falling. And so I would say don't take the national headlines on their face value, take them with a grain of salt, consider them, but then talk to someone local to see if it makes sense, because we're talking about investing. I think the numbers always have to make sense. And so Rebecca can take care of you on the loan side. I can run rental comps for you as well as value comps to make all of the numbers work together, so that we can make sure that every piece fits and makes sense for your portfolio, for you long-term, for you short-term. Because I think with the interest rates, a lot of people are like, well, why would I buy now? And the reality is that as interest rates go up and demand goes down, you have buyers that leave the market. And when buyers leave the market, we can do things like, I have clients that are closing this week. We got $8,000 off the price. We got $8,500 to buy down the rate from the seller. And we got $7,000 in repairs, which is it $23,500? So instead of offering $23,000, $50,000 over asking, they're able to come in with $23,000. Basically, the seller is contributing to help them buy the house through price, through seller credit, which means they don't have to bring as much of a down payment, and through helping to buy down their interest rate. So we can talk about those numbers and massage things and see if they make sense for you. But the second that interest rates go down, like when interest rates hit 5 again, the demand is going to go back up, and the housing market is going to be even tougher for buyers. So it's easier for buyers today than it was at the beginning of the year. So I think that's something to take into consideration.
And I think that, I mean, if you're able to, this is the best time to buy.
Mm-hmm. Dave Ramsey said that this week.
Yeah.
He said that this is the best time to buy in the next 5 years.
Wow.
Yeah. Yeah, because you're not up against so much competition. And like you said, the last 2 years, people were offering, $50,000, $100,000 over asking price. And right now, it's like even getting a seller's credit. I had one on Friday where we asked for a $20,000 seller credit, and we got it. So, it's the best. I'd say it's the best time. And I'll just also say that. I personally don't watch the news just because I know there's a lot of negativity that's surrounded by that. But but there's a lot of talk out there that that we're in the crash or whatever else. And my first house that I bought was in 2006, and everybody told me not to buy. And I bought anyway. And then, of course, as you guys all know, the 2008 crash. And I just didn't sell during that time. You don't sell when, the market goes down, you ride the wave. And I just sold last year and made a very, very good amount of money. Mm-hmm. So, if I would have listened to all those naysayers, I wouldn't be where I'm at. So
yeah, a very good amount of money would be probably an understatement.
Yeah.
for the average person, like life-changing money. Because and I tell people that a lot too, because they were like, that was the worst time to buy in the last 30 years. But as long as you held on to it, your mortgage went down, your mortgage balance went down. And you rode that wave when, from 2008, it started crashing. It went down for about 4 years. And then ever since 2012, 2013, the market's been on an upswing. And I always notice, if you go back historically, the market never goes back to where it was. So what you paid for that house in 2006, no one will ever be able to buy that house for that price ever again. So as long as you didn't sell when it was low, it's never coming back down to where it was.
Exactly. And so it's like, why wait 5 or 10 years? Because then you're going to look back and say, I wish I would have bought now. Mm-hmm.
Plus, in that 5 or 10 years, one of my favorite strategies is, and I don't know the technical name, if you live in a house 2 or 5 years, if you did sell it, the equity that you pick up, you can sell the house and you have that equity tax-free.
Yeah, you don't pay capital gains tax.
Capital gains tax,
You have to occupy it for 2 out of the last 5 years.
Correct.
So a minimum of 2, not tax, financial, or legal advice.
Yeah.
So consult your CPA, attorneys, and whoever else. Dave Ramsey's not my favorite, but
But I saw that
some
too,
people
and I've been seeing that a lot. Even I watch people on TikTok and stuff. The big investors and all of that, and they're all saying that it's still the best time right now.
There's something you just said that I hadn't considered, where I have a lot of people who are like, I want to move to Washington, but I need to wait till I retire, or Oregon, but I need to wait till I retire. So I'm anywhere from 2 to 5 years out. I've had people reach out to me, and that might be something to look at if you are seriously considering retiring in Washington. You might want to buy a property today that you could retire in the future and rent it out in the meantime to secure the prices today versus what they might be. Unless you think that when you retire in 5 years, prices are going to be lower. They might be lower in the short term, but I don't think they're going to stay lower for 5 years. Like that seems like a pretty, what do they call that type of event? Like a black swan type of event. Like COVID was a black swan type of event. But if you think that, you can rent it out in the short term, purchase now when it's getting closer to being a buyer's market. We're not quite in a full buyer's market yet because we don't have enough inventory, which is a topic for another day. But it's definitely easier than it's been for buyers in the last 2.5 years. And so, yeah, if you're thinking about retiring here, I think we hadn't thought about that, but I'm
Plus
like,
you get a good head start on paying down
the mortgage.
And letting someone else pay it down.
Letting someone else pay it down. And because the interest rates are high now, and someone else is paying it when you refinance and it's lower, now you could potentially have a lower interest rate and a lower loan balance than what you paid for it. So it makes it even more affordable when you actually do retire.
Yeah, well, I've had a lot of people say, I want to wait because the rates are high right now. And it's, if you look at it that way, that's one way to look at it. And then the other way is, well, once the rates do go lower, then you'll probably be paying over, and then on top of that, so you might get a lower rate at that time, but you're not going to make up what
Yeah,
you
you
could
don't
just
end up like it netting more.
right, exactly. You actually lose money. So because with the equity on top of that, because then you don't have the equity that you bought now, and then I've even had a renter say, well, I don't want to pay that much in interest, and it's like, okay, so you want to pay 100% in rent?
Yeah, rent is 100% interest.
Yeah, and so just you have to. It's the way you look at it.
Yeah, and I think that's one thing, and maybe I don't know if this is the right forum to talk about this, but if you're trying to get into real estate investing, or if you're already a real estate investor and you want to move your assets up to the Pacific Northwest, you would already know this, that the mindset you have to have an elevated mindset when it comes to, hey, Bo, we've been talking about you just a little bit. You have to have an elevated mindset. You can't think like everyone does. One of my favorite quotes is, observe the masses and do the opposite. So when everyone is buying, you want to be selling. When everyone's selling, you want to be buying. You have to think differently than what the average person thinks if you want to have above average results. And so thinking about, well, the mortgage rates are high, and I don't want to pay 7%. Okay, so you're going to continue renting. Then you're paying 100% interest. You have to have a different mindset to get a different result. Right. And I think for investing, the same thing applies. If you want to take that leap, it's a different arena to be a landlord, and maybe we'll have Jared on for part 3 and talk about all of his landlording and investing experience. Can I twist your arm to do that, dear?
You don't have to twist.
So we've been on for quite a while. I haven't seen any new questions come on. We got a little last wind there. It was good. Okay, I think that's all for now. Make sure you guys reach out to Rebecca. Her contact info will be in the description, but do you want to say it on camera again real quick?
Yeah, you can call me at 971-533-1082, or my email's RebeccaG@guildmortgage.net.
Okay. Bo says boom. Hey, we might see you tomorrow at the apple orchard.
Yeah.
Well, she'll see you.
We're going to be pressing some cider.
Yes, I want to do that. And getting some content. And Kevin, we'll see you guys Wednesday. See, I think that's also one of the really cool things about working with people like us, is that we actually hang out with our clients after the fact. So if you're moving up here and you're like, I don't know anyone, like, you'll know us.
Right.
And we love to get together with our clients. When Kevin had hosted his housewarming party, I invited some people that I'd previously introduced him to at another client event. So we do events with our clients, we hang out, we go out for wine tasting, we try to make it as welcoming and just make people feel comfortable, because it's really scary when you're relocating to a new market. And so as much as we can form wine tasting I'll text you. I haven't taken you yet, but I take a ton of people. And yeah, we just want to make people feel comfortable and welcome. And, you buy a house and that's great, but that's definitely not where it stops with us. So.
Right, exactly.
All right, I think that's all for now. Ciao, guys.
Bye.
If you like this format, to me, I think it's pretty cool. It's different.
Yeah.
So if anyone's watching and they like this format and they want to see maybe more interviews,
okay.
Ask them to put in the comments.
I don't know if you guys can hear him because Rebecca and I are mic'd, but Jarrett's not. So if you like this format, if you like interviews with us being live and getting to chat and interact with us, let us know in the comments. And I think that's all. Did I get everything?
That's it.
All right.
Okay,
Bye, guys.
bye.
Oh, good. Thanks,
Thanks,
Bo.
Bo.
Okay. All right.